good morning, good afternoon, and good evening, friends. Let's continue with sale of goods on approval or return basis, and let's try to cover the other two aspects of sale of goods on approval or return basis. First is when the goods are sent frequently. Earlier, we saw that one of instance where a goods is served to a customer, etc. Regularly, it's sent on a regular basis. At the beginning of the chapter, we saw three types, right? One is sale happening regularly, or sale happen on probably once in a month or twice in a month, etc. How the treatment will happen. Now, what we have to see is sale happening frequently, right? And the third, what we have to see is still happening multiple times in a day itself, right? Where how we have to maintain businesses numerously. So occasionally, frequently, and numerously. What we saw earlier is occasionally. Now the treatment remains same. There is no change in the way accounting has to happen, but the way books are maintained has got some differences. Like when the business sends goods frequently, frequently means they assume that it's daily. Daily they're sending 10 cartons, and then daily the customer is sending back one or two cartons on return not approving, and etc. So the if it is maintained in a ledger form, it's very difficult because there will be too much transaction that will come into the ledger form, which will affect the ledger balances as such. Like maintenance of ledger will become a bigger challenge. So normally, when the goods are sent on a frequent basis, a day book, a memorandum, or a day book is maintained with the details like goods sent on approval. This is the serial number or a date, and then we'll have particulars, date particulars, and ledger folio number and amount. This is maintained, and similarly, for the goods returned, the same data is maintained, and for the goods approved, same data is maintained. And finally, when the what is the balance that is still like, this amount alone has to be taken to inventory at the end of the period, right? So when the goods are sent on approval, like numerous transactions happen, 1, 2, 3, 4, etc. So the date and the date on the date of the transaction, particulars of goods sent, ledger folio reference, and then the amount at the invoice price. When we say amount, it is at invoice price. Invoice price. This is maintained, right? When similarly the goods are returned by the customer, like not approving, then the goods are returned again at the invoice price. What we saw in the journal entry, same, right? When the goods are returned, it's taken back as the invoice price. And then if the goods are approved, then a sale entry will be processed. Again, we don't have to process a sale entry because a sale entry is already done for this. Right? So here itself, the entry that's processed is in customer account debit to sales, right? So similarly, there is no need for a separate sale entry that needs to be processed if it is during the month, right? And then for the inventory that is lying in the customer's account, the balance is like goods sent on sale of approval, say 100, goods returned is 20, goods approved is 50, right? And then the balance is 10. So balance is 30. Balance is 30. This 30 has to be maintained as an inventory, right? This 30 has to be at cost price. Yes, right. Has to be at cost price. So the inventory has to be processed at the cost price for this particular transaction. For the journal entry still remains same. This is only to summarize. At the end of the period, what will happen is the total of this will be taken to sales account, like customer account debit, sales account. With this total of this column will be taken to the customer at an individual customer will be debited, and then the sales account will get credited. Right. Similarly, and this also will happen at the same level. Reverse entry will be processed, sales account debit and customer account credit. And again at the total of the column. And then goods approved, no need for a separate entry because This is after this minus this is equal to approved normally minus inventory, right? So inventory, this entry has to be processed for like inventory on sale of goods on return basis. Return basis account debit. Return basis account debit and credit to credit trading account. This is what we saw. So instead of doing it at an individual level, this is done at a summarized level for easy understanding. And otherwise, there is no change in the treatment between an individual transactions and then frequent transactions. Now, there's a third set of entry that comes in when the business sends goods numerous times. Again, there is no change in the treatment of accounts. Only thing is, in this case, what happens is the company maintains two sets of books. You can see here, the first is sales or return daybook. Sales or return ledger. What we have to understand is, again, when the sale happens, the entry that gets processed here is customer account debit, sales account credit. This is the entry. So in the sales daybook, in the credit side, let's say that's a sales daybook. Let's start a sales daybook here. This is debit side, and this is credit side. So in the sales daybook, customer 1, customer 2, customer 3. So the data will be maintained when the goods are sent on sales or sale of goods on return basis. Individual customer account will be debited and sales account will be credited. And similarly, when the customer returns the goods, and the sales account will be debited, and then individual customer account will get credited. So the reversal entry, and this is sale entry. This is sale entry, right? So sale entry, customer will be debited, and in case of reversal entry, customer will be credited. So at the end of the month, the sales daybook will be ledger. See, these two are only memorandum books. The above two are just memorandum books and will not go to proper ledger. At the end of the month, the sales daybook and the sale or return ledger both will be summarized and then transferred to the respective ledger accounts by debiting customer and crediting sales, and debiting sales and crediting customer in case of return. And again, the total that is available as unsold will be transferred to the inventory account by debiting it to the inventory on sale or return goods to trading account. There is no change in the accounting treatment. Only thing is, instead of maintaining an individual journal entries for the transactions, because the transactions are huge and numerous and frequent, a separate day books is maintained. Otherwise, there is no change in the accounting treatment. Just go through this. It's much more simpler. Like, it is one thing is what has to be very clear is all the transactions has to be recorded into the sales table. One control point here will be total of customer balance should equal to the sales amount shown in the memorandum table. Right? Total amount as shown in the sale or return daybook, and the total amount shown as sales in the memorandum daybook should match. And that is the control. Otherwise, that will say that whether all the entries have got recorded or not. Then again, for the balance which is at the end of the period, and at a cost price, the transactions will be moved into the inventory account by crediting trading account. Hope this is clear, right? We'll go into the test your knowledge type of questions in the next class. Please let me know for any queries or clarifications, and you can always send an email to babupriya@rediffmail.com, and I'll come back to you with any clarifications that you might require. Thank you, friends, and have a great and wonderful day.